Welcome. This is a simple, friendly guide to understanding debits and credits for absolute beginners. If accounting feels confusing, start here. At its heart, accounting uses a system called double entry bookkeeping. Every transaction affects at least two accounts. One side is called a debit, the other a credit. Debits and credits must always balance. Total debits equal total credits, so the books stay in balance. Accounts fall into five main types: assets, liabilities, equity, revenue, and expenses. The rule to remember is this: debits increase assets and expenses, and decrease liabilities, equity, and revenue. Credits do the opposite. They increase liabilities, equity, and revenue, and decrease assets and expenses. Think of assets as things the business owns, like cash and equipment. Liabilities are what the business owes, such as loans. Equity is the owner's claim. Revenue is money earned from sales. Expenses are the costs of running the business. Use a T account to visualize debits on the left and credits on the right. For example, if the business receives $1,000 cash from the owner as an investment, debit cash for $1,000 left side, and credit owner's equity for $1,000. Cash increases, equity increases, and debits equal credits. Another example, buying a $300 printer with cash. Debit equipment for $300, credit cash for $300. Equipment goes up, cash goes down. Still balanced. If you earn $500 from a sale paid by customer, debit cash $500 and credit revenue $500. Revenue increases on the credit side. When you pay a $200 electricity bill, debit utilities expense $200 and credit cash $200. Expenses increase with debits, cash decreases with credits. The journal records each transaction with a date, debit account, credit account, and explanation. Posting moves those amounts into ledger accounts where balances are tracked. A trial balance lists all account balances to confirm total debits equal total credits. If they don't, look for mistakes like transposed numbers, omitted entries, or wrong account types. In summary, debits left, credits right. Debits increase assets and expenses. Credits increase liabilities, equity, and revenue. Every entry has equal debits and credits. With practice, these rules become natural. Start with simple examples, use T accounts, and your confidence will grow. Good luck, and keep practicing. If you want extra help, try simple exercises or use accounting software that shows debits and credits side by side so you can check your work and learn faster over time with realistic practice examples.